I'm Virginia McGathey here on the floor at the CME Group reporting on the grain market. Today, soybeans were a mixed bag. It seemed that the rain in Argentina really kind of missed the bulk of the area where the corn and soybeans are, and so the dryness persists, and it looks like even the forecast for the future over the next 2 weeks it looks like it possibly might meet better, but for sure it's not going to be enough, and I think that we don't know exactly how much the damage is, but I don't know that we're going to be able to repair that damage, and so the market still remains relatively strong, even though it's a little bit mixed. It started out lower and it came back. We did hit a 3-week low, but the market has been overbought somewhat, so there has been some profit taking coming off the table. The one thing that's really in play right now is the trade wars. There is a real possibility of retaliation, certainly from the China side. That has everyone a little bit worried, and I think that it definitely is putting a cap on any kind of serious rally from this point. That's not to say that the prices won't improve. The U.S. dollar index also was a little bit lower today. That should offer some support, and that really has the market bouncing around on this Monday. The same thing for corn. It was kind of steady. It really had a lower start, and it started to rally back. I think that just tells us that it's giving the futures some support there, and the export demand is actually still very good in corn. So we're hoping that that's going to continue, and that will keep the prices up. Certainly, the next stop is the target is $3.95, but let's face it, $4 is the real psychological number to get to. And if we get to that point, it's a big resistance, and we can break through that. We definitely could be off to the races after that. It's going to take a little bit to get there, and let's see how this week turns out. But for sure, that's our target. Now, with the wheat, it was a little bit lower. It seemed that the USDA report that the global supplies were increased is weighing on those futures. That's not to say that the fundamentals are still dry in the southern plains, and that is going to remain and should give the market a little bit of a boost. Now, part of the retracement has been because technically we have been overbought. I mean, the relative strength index was up almost 80% for the 14-day RSI. That's really huge, technically speaking, for those kind of traders, and it gives them pause to hang on to some of their longs, and they were trying to liquidate some. But that just tells us that volatility is here to stay. The market did strengthen, including Kansas City wheat. If we can get a little bit rolling on these markets, I think this full weather market's going to get us some prices that we haven't seen in quite a while. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.